What's up guys, welcome back to my channel. It's been a minute since I made a stock market update video, so I'm going to be doing that for you guys today. I'm going to be talking about the S&P 500 and the VIX, the macro events that'll transpire over the next couple of weeks, and what will ultimately shape the markets for the S&P 500 going forward. So I'm going to be talking about all of that, give you guys my projection for the S&P 500, and without further ado, let's get right to it. So we're looking at the S&P 500 chart, the SPY ETF. From a technical picture standpoint, you can see that we've broken trend since the beginning of September. So you can see that in September, we dropped down to around 633 or 635, and then we started, ripping higher to around 667. So we put in a brand new high this week, 667.34, which is around 6,700 or close to it on the SPX, which is the cash index. So on the SPY, you can see that we put in a couple of red bars over the last couple of days. And a lot of people are calling for tops. A lot of people are shorting. But you can see here this doji candle here. I'm going to zoom in on this doji candle. This was the FOMC meeting last week where the Fed cut interest rates. And a lot of people were actually hedged to the downside. And because of that, market makers, they don't really like to pay out all these puts. So what they did was they moved the market higher to around 667 all-time highs. And that caught a lot of people off guard because you can see that, at that time, the S&P 500 was sitting around 6,600. 6,600 was like the top. A lot of people are top calling that was their year-end projection price target for the S&P 500. And yet the market moved another 100 points higher to 6,700, and that has caused quite a bit of euphoria. I would say a lot of people were caught off guard with this move on the S&P 500, but it is what it is, and the S&P 500 has since started selling off. So you can see that I did play the downside here. I took 665 puts expiring October 17th. And I do believe that because we have a break of trend, we could see a bit of downside, especially with the PCE report that's going to be coming in tomorrow, which is the inflation report. And if it comes in harder than expected, we could see a bit of downside. Now, you can see that on, the bigger trend, the S&P 500 hasn't really broken its bull trend, even though, broke below its 9 exponential moving average, which is this yellow line over here. You can see that this line over here is a 20-day moving average. So we haven't broken that trend yet. The trend remains higher. We haven't really tagged the 50-day moving average at 643. And, I'm suspecting that because a lot of people are short here, we have 3 red days so far, that the market could still attempt to push higher into a new all-time highs over the next couple of days to next week. And I have my reasons for thinking this way, and it's because if you look at the 4-hour time frame, you can see that the RSI is pretty oversold. It's pretty oversold back at the September lows, really. So we came down to the 200-day moving average on the 4-hour time frame, and we bounced off of it, right? And here you can see that we didn't really even tag the 200, and we're already this oversold. And so we're attempting to bounce off the 100 moving average on the 4-hour time frame, which is this white line here, and we could continue to push off of this moving average higher to form a divergence before all is said and done. And part of my thinking is because if you look at the sell-off over the last 3 days or so, right? The sell-off was not at all impulsive. And what do I mean by impulsive? Meaning that, every time we got a red bar, it's only sold off like 3 points on the S&P 500. And here's another, 4, 3, 4, 5 points. Another 3, 4, 5 points here. So, there's a lot of moving averages below price that could help support the price action. And that's exactly what we're seeing here. We're seeing price, bounce off of the 20, the 50, the 100. Didn't really reach the 200 yet, but price isn't really slicing through all these moving averages like we saw before back in early September or even early August. You can see that in early August it sliced through all these supports like butter, and it took just 2 days, right? In the 2 day drop, we we dropped look, about 20 points to the downside. And here it's pretty much the same thing, but we're not seeing anything similar to this. So that's why, in my opinion, I believe that this sort of sell off can be viewed as more corrective than impulsive, and that could lead to another new all-time high easily, right? And going over the economic calendar for the next couple of weeks, we have the PCE on Friday, which I talked about. It's basically an inflation report, and if it comes in hotter or cooler than expected, it could affect the chances of a October or November cut, because mind you, the market is pricing in a two more rate cuts for the end of the year. And if markets receive better than expected economic reports, then maybe they don't price in as much of a rate cut as anticipated, and that could shift the markets a little bit. And next Friday we have jobs, which is again going to be very important because uh, the Fed, Jerome Powell, talked about employment being a major factor in cutting rates in September. So if it somehow comes in better than expected, then there's a less chance of a rate cut over the next couple of months. And I believe after next week we have CPI, and then we have earning season that is gonna kick off in mid-October. But the following week on Tuesday we have Netflix. So big tech earnings kick off really mid-October to late October. And so you can see that we have a really small window. Today's September 26th. So we have a really small window of either moving higher or moving lower into earnings, because earnings is going to be a really big catalyst for the markets. And if we were to push higher again into earnings, then that means earnings could be a big catalyst for a sell-off. And the reason why that I mentioned previously is that even though this could be nesting to the downside, there's still a chance that we could continue to push higher um into earnings, which is early to mid October. And to back up my thesis, my hypothesis, I always look on Twitter, on Cheddar Flow. you know we we just got, over the past 40 minutes, we just got someone buying 6.8 million worth of out the money SPY calls expiring October 31st for 665. That to me shows someone knows something, or someone has really strong conviction that the S&P 500 will, either retest highs or, blow past all-time highs yet again. And October 31st, it shows conviction and urgency, especially with a $6.8 million position expiring October 31st. So, over the next couple of weeks, one could expect the market is going to push higher into all-time highs again before the market sells off. So that tells me that, it's possible that, earnings could be the catalyst for a real stock market correction or a sell-off. But as of now, for people wishing for a immediate stock market correction or a sell-off, like I mentioned previously, I just don't see the structure breakdown yet. S&P 500 is still bullish, holding the 20-day moving average. Hasn't even tested the 50-day moving average yet. And you look at the Qs, you can see that, the Qs hasn't really gotten a MACD cross on the daily time frame yet, and it's still holding the 20-day moving average. Even though we have a short-term break of trend with this cross below the 9 exponential moving average, which is that yellow line there, you know, the uptrend has not been broken yet. There's so much support down here. We have the 20, the 50, 100, 200. Before we can say anything is even extremely remotely bearish. And you can see that the previous all-time highs here was around 583. So, even if it comes down another, another, right now it's 593, another 10 points, it's still holding on to its bullish trend. So that leads me to believe that, if the Qs are going to go higher, the S&P 500 is probably going to go higher too. And you can see the market leaders, Nvidia, on the daily time frame still having a MACD, a bullish MACD showing bullish momentum. It's reclaiming these moving averages here. It dropped down here and it's reclaiming moving the 50, the 20 moving averages. And even though we had a down day today, the Nvidia stock is green, up 1.18%, around $2. So as long as Nvidia continues to hold and not break down, then it's reasonable to assume that the S&P 500, even though it's down 0.43% today, the Qs, which are down around 0.41% today, are going to continue its uptrend over the next couple of weeks. So if you guys found this analysis helpful, give me a like, give me a thumbs up. If you have any questions with regards to the market, let me know down in the comment section below, and I will see you guys in the next video. Peace.